Thanks for clicking. The Toronto Regional Real Estate Board has released its data for the month of May, showing a continual increase in sales and prices as supply remains perpetually low. In fact, supply was so low in May that Toronto saw the biggest increase in prices since its pandemic peak.
I got my car back?
Yet the celebrations might be short-lived, as evidence is mounting that the stress on Canada's housing market is growing, with the IMF noting that out of all of the countries in the OECD, Canada is at the #1 risk for mortgage defaults. And with these growing stresses, it's not clear that Canada's real estate market, that Toronto's real estate market, will be able to make a full recovery to its pandemic highs. So what I want to do today is go over Toronto's data for the month of May, take a look at some looming pressures on Canada's real estate market, and obviously that of Toronto's, and then discuss what to look for next. Speaking of next, the Bank of Canada is set to make its interest rate announcement on Wednesday, and as of the filming of this video, 68% of respondents on the poll on this channel think that we're going to see a 25 basis point rate hike. We will obviously find out what the Bank of Canada is going to do on Wednesday, and we'll have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. On to the data. First off, the benchmark price. The benchmark price, if you'll remember, that's the price of a home, which represents the most popular set of features. The benchmark price shot up in Toronto. In April, the benchmark was sitting at $1,145,700, and that jumped up almost $19,000 to $1,164,400. And although the benchmark price rose about $19,000 in May, the average price shot up over $40,000 in May as well. The average price in April was sitting at $1,153,000, and that jumped up to $1,196,100 in May. So that's almost a $43,000 increase in the average price in just May alone. And the median price also shot up in May. The median price, if you'll remember, that's where half as many homes sell over that price and half as many sell under that price. In April, the median price of a home in Toronto was $999,999, and in May, that shot up to $1,035,000. A $35,001 increase in May. And the price increases make more sense when we look at the lack of inventory in Toronto. If we look at the months of inventory measurement, that measures if no more homes came to market, if everyone stopped selling their homes in Toronto, how long would it take for Toronto to run out of homes for sale? In April, the MOI measurement was sitting at 2.3, and that was down to 2.2 in May. So it would take Toronto 2.2 months to run out of homes for sale if everyone stopped listing their homes.
We have extremely skilled negotiators.
And when you have this lack of supply and combine it with surging demand in the spring market, we see prices go up. We see prices go more over asking price. If we look at the sales to list price ratio, which measures by how much over or under asking price a home sells. So if a home is listed for $100,000 and sells for $105,000, the SLPR would be 105. The SLPR in April was sitting at 103, and that jumped up to 105 in May. So, on average, homes are selling for 5% over asking. So, in summary, we have the benchmark price up almost $20,000. We have the average price up over $40,000. We have the median price up over $35,000. We have less inventory on the market, and of what is on the market, homes are selling for more over asking price than they did previously. And the Toronto Regional Real Estate Board said that these major price increases are due mostly to supply.
Except this time it's true.
Which makes sense, especially when you consider that new listings are down 20% since this point in time last year. With that said, even with a lack of listings, for now, the Toronto real estate market is still a long way from its pandemic highs reached in February of 2022. Back then, the benchmark price hit $1,340,000, or about $175,000 less than it is right now. And with looming pressures growing on the real estate market, on Toronto's market, and on Canada's market, it's not clear that we're going back to those pandemic highs anytime soon either. First, as mentioned, the IMF just recently noted that Canada is #1 on its list of countries at risk of mortgage defaults. The IMF noted that economies with high household debt and more floating rate loans have a greater risk of default, and that definitely rings home, with Canada's variable rate usage skyrocketing during the pandemic and hitting its peak in January of 2022 with 57%, and Desjardins just last week calling Canada's looming mortgage debt a ticking time bomb. And the IMF and Desjardins are just warning about mortgage debt. It was also reported last month that Canada has the highest debt-to-income ratio in the G7, and the banks are bracing putting away loan loss reserves, the banks are bracing for a wave of defaults. And to add to these growing pressures, we have surprisingly high GDP growth in Canada as Canadians continue to spend. We have resurgent inflation here in Canada and a hot jobs market in the US, all of which will be putting more pressure on the Bank of Canada to raise rates at its next meeting. So, despite all of the price increases that we've seen over the past few months in Toronto's real estate market, in Canada's real estate market, does anyone really think that Canadian mortgage holders can be at the highest risk of default in the OECD, that Canadian households can have the highest debt levels in the G7, that we can have resurgent inflation, and a central bank looking to raise interest rates and cause a recession, and then, even with all of that happening, that the real estate market just continues to boom back upwards towards its pandemic highs, back when money was free?
I could see that as a very real possibility.
That's a tall order. So, in summary, in May, Toronto saw its real estate prices increase all across the board, with the benchmark, average, and median prices up. We have less inventory coming to the market. We have 20% less listings than there was last year, and homes are selling for more over asking than they did the previous month. With that said, there are a number of pressures working their way through Toronto's real estate market, through Canada's real estate market, and I don't think we've seen the results of those pressures as of yet. With that said, what the Bank of Canada decides to do on Wednesday will obviously have a big impact on the real estate markets going forward, and we will have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.